this week here in Spain, we welcome Cathal Rochford back to the studio. How are you doing, Cathal?
I'm doing very well, Howard. Keeping well. What about yourself? How are you?
I'm well, thank you very much.
Good.
Well, the big financial news affecting British expatriates, now UK listeners, has of course been the UK budget, the first one under a Labour Party government in almost 15 years. We've been anticipating what it may contain since the July election. With tax and pension reforms, the devil's often in the detail. So, Cathal, I understand you'll need time to analyse all the small print released alongside Rachel Reeves' budget speech. For today, can you summarise the key points that may affect our listeners?
Of course, yes. I'll avoid going into too much of the finer details until we've had a chance to analyse and digest the budget in full. However, my colleague Chris, I believe, will be speaking about it over the coming weeks.
Thank you. OK, then let's start with income tax. Have income tax rates been left alone, or have they changed? And what about the income tax thresholds? Have these been left frozen?
Yes, so the income tax rates have been left alone. There hasn't been any changes there. So there's been no direct increase in UK income tax rates, which is good news, I guess. There will be no extension of the freeze in income tax and national insurance thresholds beyond the decisions of the previous government, Reeves has said. So from 2028 to 2029, personal tax thresholds will be uprated in line with inflation, as she has said. So that does mean that the rates will remain frozen. So this effectively means that the amount that tax one will pay will be slightly higher because the allowances are not adjusted with inflation. So what they call fiscal drag is a helpful revenue raiser for the Treasury, given it's not a direct tax increase, but it still raises more money because income tax thresholds do not rise with price rises. A few other changes. National insurance is to rise to 15% for employers from a rate of 13.8%, although Reeves said that she'll not increase national insurance, VAT or income tax for working people. So overall, no increase in income tax, but people will likely pay more tax from their pocket for the next couple of years.
What about taxes on investment income, such as capital gains?
Yes, so Chancellor Reeves has raised the lower rate of capital gains tax from 10 to 18% and the higher rate of capital gains tax from 20 to 24%, effective as of the 30th of October, so coming into effect right away. In the budget, Reeves said that capital gains tax on residential property will remain unchanged, though at 18 and 24%, so there's been no increase in the higher rate. In addition, Reeves said that she will increase capital gains tax rates on carried interest to 32% from April 2025, up from 28% as it currently stands. So this more so affects companies like private equity firms and such. So the hike in capital gains tax comes on top of the slashing of the tax-free allowance over the past years from £12,300 a year in 2022-23 to only £3,000 this year. So overall, there has indeed been an increase in capital gains tax.
Did the budget include any reforms to inheritance tax?
Yeah, so there's been some reforms on the inheritance tax side. Reeves says that she will extend the inheritance tax threshold freeze for a further 2 years to 2030. So that means that the first £325,000 of any estate can be inherited tax-free, rising to £500,000 if the estate includes a residence passed to a direct descendants. And so this would be £1 million in total of a tax-free allowance for a couple, or if the allowances are passed to a surviving spouse or civil partner. So overall, this means that, the allowance against inheritance tax will have been frozen for almost 20 years. So again, like the fiscal drag, it means that people will indeed be paying more inheritance tax, given that asset values tend to rise, but the allowance will have been frozen at £325,000. Reeves also said that she will bring inherited pensions into inheritance tax from 2027. So this is quite a big change. And there's been a few other changes in terms of agricultural property relief, business property relief. We'll analyse this further. But overall, the change that pensions will be included for inheritance tax from 2027 is quite a big change. So overall, we believe that inheritance tax revenue will continue to rise. People will continue to pay more, although there's been no major change for the most part in inheritance tax.
And what about the domicile regime?
So Reeves says that she will be abolishing the non-domicile tax regime and remove the concept of domicile from the tax system from April of next year. So this applies to a UK resident whose permanent home or domicile for tax purposes is outside of the UK. It means that they do not pay UK tax on money they make elsewhere in the world. So basically they're changing this from a domicile type system to a new residence-based system. So this will come into effect, and it likely means that whether somebody pays inheritance tax or not will be based on how many years they've spent outside of the UK if they're leavers, or how many years inside the UK if they've moved there. So it probably clarifies things on the inheritance tax side and the non-domicile side, but we'll wait and see what the finer details are on that in terms of the residence test and so on and so forth. So there's been big changes on the non-dom regime, which was to be expected because even the Conservative Party were looking to make changes there.
And do you have any other initial thoughts on the budget or advice for our listeners?
Yeah, in my opinion, I think the direction of travel of UK tax is upwards. And the UK now is objectively a high tax country. So for people who have an ambition to live in Southern Europe, France, Spain, Portugal, etc., now may be a good time to revisit your plans. Aside from the great weather and more relaxed pace of life that you enjoy in Southern Europe, tax increases in the UK may be another good reason to consider a move. In Spain, for example, we've enjoyed in many regions a broad reduction in some of the key taxes. And net, it can be advantageous tax-wise to live in Spain versus the UK. And we're seeing a lot of clients make the move, and this direction of travel continues. So overall, we're seeing a lot of people vote with their feet, if you will. And I think I would expect there will be further tax increases in future budgets. So I think it's worth looking around to where your lifestyle preferences may be. And this may very well line up with a more favourable tax regime.
And I guess if you're in the UK listening to this and you're thinking of moving to Europe, get ahead of the curve and look at the Blevins website.
Yes, absolutely. If you're interested in moving to one of the countries that we cover in Southern Europe, please have a look at our website. We've lots of good resources, podcasts, articles, and good information on the website. And of course, even better, get in touch with one of our local advisors in our local regions, and we'd be very happy to have a no obligation conversation and see how we can assist with making your plans to move to Southern Europe seamless, simple, and very, very, very financially efficient.
Many thanks, Cathal. We'll return to the UK budget in a couple of weeks with Chris to look at some of these issues in more detail. And I think we'll talk again next week.
Indeed. Thank you very much, Howard. A pleasure as always.